Today, forget rate cut hopes for now as unemployment declines. Hello again, it's Martin North from Digital Finance Analytics, world latest post covering finance and property news. The latest volatile data from the ABS was released today. As I've explained before, along with many other countries, Australian employment data is very noisy, and after last month's unexpected rise, which got people betting on rate cuts, unemployment declined in October, and the economy added more jobs than anticipated. This confirmed that the labour market remains tight and validates the Reserve Bank's decision to leave interest rates unchanged. Stocks and bonds, though, slumped as a result. The season-adjusted unemployment rate fell to 4.3% in October after rising to 4.5% in September. The October unemployment rate is in line with the June, July and August 2025 figures. The number of unemployed people fell by 17,000 this month, while the number of employed people rose by 42,000. The ABS said this month more unemployed people moved into employment compared to a typical October. Full-time employment rose by 55,000. The number of females in full-time employment rose by 29,000, while the number of males rose by 26,000. Rising full-time employment contrasted with a fall in part-time employment of 13,000 people. The fall in part-time employment was driven by the female workforce, with female part-time employment falling by 21,000 people. Males partly offset this with an 8,000-person rise in part-time employment. The participation rate remained steady at 67% in October, and male participation rose 0.2 percentage points to 71%, while female participation fell 0.2 percentage points to 61%. The employment to population ratio remained at 64%. Hours worked rose by 0.5% in October, higher than the 0.3% rise in employment. The underemployment rate fell by 0.2 percentage points to 5.7% in October. That was 0.5 percentage points lower than October 2024 and 3 percentage points lower than March 2020. The underutilization rate, which combines the unemployment and underemployment rate, fell by 0.3 percentage points to 10%. That was 0.3 percentage points lower than October 24 and 3.9% lower than March 2020. The Australian dollar and policy-sensitive 3-year government bond yields jumped after the release, while stocks slid the most since September as traders slashed expectations of rate cuts next year. Swaps markets were pricing in less than a 40% chance of an easing by the middle of 2026, compared with a 70% chance by September 26 on Wednesday. With the RBA already suggesting that the labour market is tight, the output gap is positive, and there is stickiness in inflation, this data will largely reinforce the view and keep them on the sidelines for the foreseeable future, said Sue Leon, chief economist at Royal Bank of Canada, Australia. Labour market resilience amid an economy with little spare capacity suggests that a slightly restrictive policy stance at 3.6% is both appropriate and prudent, she added. Jobs data, of course, is crucial for the RBA's rate-setting board, as the resilience of the labour market and worries about its tightness potentially risk rekindling price pressures, and that's been one of the critical factors driving a cautious approach in the current easing cycle. The central bank kept borrowing costs unchanged last week, and Governor Michelle Bullock signalled further easing is unlikely in the near term after 3 rate cuts this year. Longer-dated yields have also climbed relative to the US peers on diverging central bank policy outlooks, trading at their highest relative to treasuries since August 2024. That's helped support the Australian dollar to be among the best-performing group of 10 currencies since September the 1st. We retain a bias for Australian dollars to trend higher, said Christopher Wong, strategist at Overseas Chinese Banking Corporation in Singapore. A relatively resilient Chinese yuan and the RBA nearing the end of its cycle are factors supportive of the Aussie, so long as global growth holds up and the US dollar softness returns. The RBA expects the jobless rate to sit at around 4.4% through its forecast horizon, while unemployment growth is seen slowing this year and next. The forecasts released last week assumed the cash rate of 3.4% in the middle of 2026, implying just one cut between now and next June. But even that now is perhaps unlikely. Australia's labour market has been a bright spot in the economy, though it has gradually cooled from post-pandemic highs. Even so, the RBA's latest assessment was that the jobs market does remain tight based on a range of indicators, including an elevated ratio of vacancies to employment workers, above average share of firms experiencing difficulty finding workers, high unit labour cost growth, and model estimates of full employment. Data released this week has pointed to a strengthening in the economy, with optimists taking the ascendancy in monthly consumer confidence for the first time in nearly 4 years on some surveys, and home loans surging to a record in the third quarter, led by lending to investors. In a sign of a pickup in economic momentum, data from Colliers shows that retail rents in Sydney CBD have risen 3% since 2022, driven by strong tourism, infrastructure upgrades, and a surging luxury and dining demand, while vacancy rates have dropped, with foot traffic now at 84% of pre-pandemic levels. Earlier this week, RBA Deputy Governor Andrew Horser said policymakers are being challenged by an apparent lack of spare capacity in the economy just as it enters a recovery phase, raising the risk of renewed inflation pressures, or stagflation, we could say. One other factor to note is that the ABS data released yesterday showed strong rises in the number of international border crossings. That's border crossings rather than the number of people themselves. They reported short-term visitors' arrivals were at 695,500, an increase of 10.4% from 1 year earlier. Short-term residents returning at just over 1 million was an increase of 2.9% from a year earlier. The total arrivals at 1.8 million was an increase of 5.6% in 1 year earlier, and total departures was an increase of 6.9% on 1 year earlier. Now, whilst this does not directly translate into the migration count, as the ABS is very, very keen to point out, it does underscore rising numbers of workers arriving. As a result, we need to see somewhere around 30,000 new jobs created each month and every month to keep the unemployment rate steady. That will be no mean feat. But more broadly, any hopes of more rate cuts continue to evaporate. So those banking on deep cuts from here will be very sorely disappointed. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.